Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, it's time for our weekly look at the SPY, the Nasdaq, the PCC and the VIX, and just generally have a feel for the US major indices here and see what we can see. So should be a pretty quick update. If you haven't seen last week's video on this, you should probably go back and see it, as I spent much more time explaining what all these yellow and green lines are. They're the relationships over the long term of account with the PCC and the VIX and the various highs and lows that are formed in the market. So I don't really want to go over all that again. I just want to give you a quick update. So since last week we've got the same count, except I've swapped around the orange count and the red count to show my preference for the alternate becoming the primary within the greater primary. Now for the longest time we've said well, it's not the longest time, for several weeks, a few months now actually for that matter, we've said that this is likely going to be a double zigzag, but whether it ends here or whether we get an extension in the C, that's up for debate. Well, with the price data over the last week, we were looking at A, B, C to here, with a lower low, and then a 1, 2, and a rally out of here, with the potential C of the Y of the 2 being in, and I had an alternate count which was looking at this as a 1 and a 2, this potentially is a 3 and a 4, and this is a 5 of an A, then a B and a C. Well, given the wave formation we've been presented with so far, 1, 2, 3, 4, it does appear that this is now more likely the case. So we're going to come down here in A, we're going to get a B wave retracement for a zigzag, and then we're going to come down lower. So we've still got our two targets at the 50 349.46 and the 61.8, the retracement of everything since the March 20 lows, which is the 318.23. Now it could go deeper than that, it could stop before reaching those, and we also have an alternative to consider. Now before we come in and consider an alternative which gives us a slightly higher finish, I want to go over to the Nasdaq and bring you up to date with that count, because although this counts the same, the alternative counts cleaner in the Nasdaq, and that's why I would rather go over it first. So, same idea essentially. We've had this zigzag structure here. This is our W. We've had this 3, 3, 5 expanding B wave, expanding C wave flat pattern for our X. And then we were looking at A, B and C, and then 1 and 2 and so on and so forth, with the potential of having finished that Y into the 2. But we also had the alternate count, which is now the 1. Well, it was orange and I said I wasn't picking between the two. Well, now I think I am, which is 1, 2, 3, 4, 5 into an A. This could come in at any time. We could extend lower. Then we're going to get a B. That could be anything from 38.2 to 78.6 retracement, and then down in the C. And we can see how we're already roughly at the 50% retracement since the March low, which is this blue line here. Let me just pop a price on it so you can see roughly where it is. 34.40, let's just correct that. Right, and then we've got the 61.8 below. So as you can see, the Nasdaq has already given up more of the rally since the low than the SPY has. 5.3. Okay, let's just tidy up these doodles. So there you go, so that's the same, that's in line with the SPY. Now here's an alternative that I want to share. So we looked at this a couple of weeks ago as well, and always have had it in the back of our mind, and that's the idea that it's a diagonal. Okay, now this allows for a much sooner completion, so let's just bring up those targets again. Let's rename that folder. Okay, so what we've got here, we finished in this truncation up here in the 5th. That's the same. We get a zigzag down in a 1, zigzag into a 2, zigzag into a 3, zigzag into a 4, zigzag into a 5 for our A. Right. 3 is shorter than 1. I don't know, I just undid what I typed there. Okay, 3 is longer than 1. 4 is shorter than 2. 5 is shorter than 3, so it's a diagonal. We get a very sharp and fast B wave, which I can't really do anything with. If there's subdivision there, I can't really find it, which makes it a little dodgy. Come down to a smaller time frame, and maybe there's a very fast zigzag in here. And then we get 1, 2, 1, 2, 3, 4 into 3, 4 into 5 into C around the 50. That would complete our 2, and then we're done. 50% of the market retracing off into a 3. 61.8 is below that. Could go deeper. So we have 2 counts. I'm going to have the diag as the alternate, and I'm going to stick with the primary for the moment, which is the idea that we're actually getting an extended Y wave. So we've had one zigzag in the W, we've had this flatten at X, and we're going to get a bigger Y, and the price is going to push down deeper. So that is basically the analysis for the Elliott wave for the Nasdaq and the SPY. There really is nothing else to talk about at the moment other than to show you the diagonal here also in the SPY. Now, the issue we've got here is, yes, there's a zigzag here, and there's a zigzag here, and a zigzag here, and a zigzag here, and a zigzag here. Problem is the 5th truncates before the 3rd. Now that's fine, it's shorter than the 3rd therefore, but we shouldn't really have a truncation. They're quite rare. They can happen though, so we've got a truncation, but then we have a C wave truncation within the last zigzag, so we get a double truncation down here. Now that is rare. We do appear to have a slightly clearer zigzag in the B wave, and then we've got 5 waves coming down here for the C, so similar to what we've had in the Nasdaq. Okay, so we're going to get a 5th wave down here, and that's going to complete the C, and then we're going to come out of here. So we've had diagonal A, B wave, and then we've had impulse C. That will be maintained as an alternate as well, and I will keep the primary idea that it's just going to be an extended, longer Y wave with a more severe correction to come in the markets. Yeah, but a buying opportunity when we come down here. So let's now have a look at our RSI and our MACD here. We can see how between the recent lows there has been some bullish divergence. This is on the daytime frame. We've got a low and the higher low. Now this is only a low and the higher low divergence between a previous low and current price. It is not a confirmed low, so that divergence can disappear. We have this longer divergence here from this low back here, but we did reset the RSI with another overbought condition with this X wave swing, you see. So we can't really compare the divergence created in the W wave with the separate zigzag in the Y wave. This should develop its own divergence if it's going to have divergence at its lows. So no such thing going on in the MACD. It's just all round bearish, continuing to push lower, continuing to go further and further into negative territory with the average accelerating away from the signal there. So that's just flat out looking bearish. If we look at the volume at the moment, we can see how we're pretty, there's nothing standing out or screaming yet that we've capitulated. Okay, we're pretty flat all round. We've had some spike in the volume here in this initial W wave down. But other than that, we're really not all that impressive. Volume has picked up on the way down here though, so that's nothing out of the ordinary. As I pointed out before, the volume increases with the SPY here during the corrections. It's the corrective elements that produce the volume and not the bullish rallies. So volume actually increasing during the correction is perfectly normal. If this was the correction at cycle wave degree here, then this is a correction at primary wave degree. This is higher than all of what we came before it, but not higher than that. If we look at the RSI readings, we can see the same. We've got the most oversold condition back here with our W. We've got the most oversold, the greatest net bearish momentum back here, and this was when we entered a primary wave degree correction, as opposed to a cycle wave degree correction, as opposed to all of these intermediate wave degree corrections. So that all seems to be lining up in terms of having the right look, and I'm still relatively happy with that. Now that's the scene here in the SPY. Nasdaq looking no different at the moment in terms of indicators. If we bring up our moving averages, we can see we're now below the 10, the 20, the 250 and the 60 on the daytime frame, with the 60 preparing to death cross over the 250. Now this often coincides with a low. It doesn't always coincide with the bottom, but it often coincides with a low. So death cross occurs, low occurs shortly after. That could be the B wave bounce. It could be the low, or it could be the B wave bounce before heading lower. Okay, now I want to go over now and have a look at the PCC, because I looked at this last week and I pointed out an interesting trend here going back from 2011 to present day, and we can see how we're using these two moving averages, the 60 and the 250, for our put to call ratio. We can see how each successive fear reading has been part of a downward trend. So I'm kind of expecting the same here. Now we are approaching extreme and fear and panic levels, right? So we should form a market low. Now we could do it anywhere in here. We could even do one of these again. Now that's possible if everything goes to shit. Right, that's possible. But if this is a primary wave degree correction, we're going to come into here, find resistance, and then we're going to start to head back to extreme greed and complacency over the next year or two. Okay, and then we'll go into another bull wave higher, and then we'll probably set new lows as the trend does appear to be going both ways, right? So we're getting more and more complacent each time we make a high. We're getting less and less fearful each time we make a low. Yeah, that's a very basic way of putting it. This is not an exact science. It's just using moving averages based off of the data. So either way, I've noticed that trend and I find that quite intriguing. So we'll be keeping an eye on that. So essentially, with this being a slightly lagging indicator as the moving averages are following the data, then we could bottom at any time. Right? We could start to form lows at any time. Now we don't necessarily get the reading and then form a low, or necessarily form a low and then get the reading. It has been within a few days, within a week or two each time it's occurred. So we can't call it to the day, but we'll see. If we get a violent reversal from this, that would likely be signaling that if the market hasn't already bottomed, it's going to, because once you come up into these tops, they don't tend to do anything else. They come to a top and then they reverse. So if you had something like that, it would be unlikely to do this. You would likely, if you come back to this trend line, topped. Now if we come over and have a look at the VIX, ignore all those lines and stuff. They are literally just lining up with previous highs and lows on the SPY. Like I said, I covered that in the previous video. Now you can see how even though we've got this rising trend line, which we've had underlying volatility increasing the whole time, we're still very much below any of the previous extremes. We're not getting extreme readings. We're just tipping our nose into this larger middle range box here, where we've had several other readings in the past which have spiked. Right, and we're back in that territory again just, but we're nowhere near the COVID panic, and we're nowhere near the 2008 meltdown. Alright, so we haven't broken out into one of those kind of disastrous sell-offs yet, but the VIX is elevated and it is now into this mid-range zone where we set these previous highs at major corrections. So if we're going to have another major correction, finishing the VIX somewhere in this territory, while the PCC finishes somewhere in this territory, that all makes sense. Nasdaq coming down for one more zigzag, okay, in conjunction with that, and the SPY coming down for one more zigzag in conjunction with those things. They are both possible. Also possible that we are going to finish the correction a little sooner with a diagonal and then come out of here. Same with the Nasdaq here. We could finish with a diagonal right here and then come out. So we could be right near the lows, or we could have this one final additional zigzag to do. But either way, I would argue that the VIX getting elevated and the PCC getting back up to this long-term downward trend line and getting back into extreme and fear and panic territory suggests that a low is coming. It could be a fair percentage away yet. I mean, if we get that fall down to the 61.8, that's another 13%. Okay, so, and if we get it in a SPY, it's much more intimidating. Okay, that could be another 19%. That could, well, 20% more from where we are. That could be another big fall. Okay, but it doesn't have to be. So I'm going to stick with the more bearish primary for the moment, as I think the subwave count is working better. But if I see a reversal out of here, death cross, violent 5-wave reversal out of here, I'm going to start thinking that this diag may well have been it. Okay, and if I get the same readings as I expect to see in the VIX and the PCC, I'm going to start thinking the same. Alright then, but in the meantime, things are not looking particularly good for the American markets. But things, as I would always like to remind people, things are always darkest before the dawn. So regarding your own analysis, you should always do your own analysis and follow your own assessment, of course. But ask yourselves, always keep in mind of how people are generally behaving at the moment. What are you hearing in social media? What are you hearing in the people around you? Is there an awful lot of fear and worry, or are people highly bullish? I don't think we're quite at terror and panic capitulation levels yet from my own personal assessment, but I could be completely wrong. I've been in the market for many years and nothing really shakes me. whereas other people who are newer are going to be very shaken up by this. So it's all a matter of perspective. But either way, that's it, guys. I don't see any more reason to drag this out. That's what I think is happening at the moment, and I will be back with you for another update next week. Thank you very much for watching this video, this technical analysis of the SPY, the VIX, the PCC and the Nasdaq. If you're new to the channel and you like what you're seeing, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave a comment in the comment section below, and as always, an enormous thank you to my Patreons. Your support is greatly appreciated. If you're interested in becoming a patron and getting access to all the benefits, follow the link in the description box below, head over to the Patreon page, have a read of the various tiers, see if there's anything you're interested in, and feel free to sign up now. And if you're not following me on Twitter yet, there's also a link to my Twitter feed in the description box below. Alright guys, take care of yourselves, and I'll be back with you later. All the best. Bye bye.